What's up, everybody? Art Turner, Data Productions Media. Dreams are tangible aspirations where we scheme our dreams into existence. We have a banger today, an impromptu interview with the EFSH whale, Matt. Thank you for reaching out, Matt, a couple days ago, saying that you wanted to do a YouTube video to talk about the happenings with the stock right now, where you see it going in the future. And we got a lot of stuff on the deck today. So again, thank you. And let's just get straight down to business. People are watching, it's been an emotional last couple weeks. But we want to know to start off, how'd you find out about EFSH and what, attracted you to it?
Sure. So let's kind of start with some basics. EFSH projecting $90 million in revenue for all of 2023, which is almost 100% increase in top line revenue for the year. In quarter one, 15.4 million in top line revenue with 1 million of positive net, which is obviously very attractive because, right now it's trading at a $5 million market cap, and yet they had $15 million in revenue with a positive net income. Mm-hmm. Q2, $19.4 million in revenue, which represents almost 40% of overall revenue of all of 2022. So these are impressive numbers. And then, if you're going to subtract the 90 million from the 35 million that they already printed for the first half of the year, that leaves, another 50 to 55 million revenue for Q3 and Q4. So, these are pretty significant numbers for a stock that's, trading right now at 11 cents at under a $5 million market cap. Mm-hmm. Let me get into, also EFSH specifically, it's an asset play. What is an asset play? It's a company that has something of value that you know about. And, it could be something as simple as sitting on a pile of cash. Now, EFSH has 6 subsidiaries. Each subsidiary has an intrinsic value right now, which is crazy, that matches the entire parent company. So if you were going to break each subsidiary down, and let's say you're going to spin one of them off into its own IPO, which we already know that they're considering doing now. Mm-hmm. Hypothetically, one of these IPOs can spin off for a higher market cap than the entire parent company, which is 1847 Holdings, which is trading under 5 million. So if you're going to, spin off, let's say, Kyle's Custom Wood Shop, and again, this is all hypothetical and I don't have the exact numbers, it could spin off at a market cap at, 8 to 10 million. And that kind of highlights that colossal gap between intrinsic value and market cap. Mm-hmm. Or, another scenario is they can sell an asset for a pile of cash. If one of these assets are worth, $8 million in its own merit, they can go and sell that, and that can give them that pile of cash, and they could use that cash to either, pay off debt or have a significant pile of cash, and then maybe use that pile of cash to buy another asset at a favorable price, down the line. So I'm going to let me give an example of another asset play that kind of played out how we're thinking EFSH would play out. It's a little bit dated, but I want to be able to give that example. Let's go to Pebble Beach. So this was, back in the 1970s and 80s, but I feel like there's a good equivalency there. So Pebble Beach was a company that was trading at about a $25 million market cap, which would be about $14.50 per share. Less than 3 years later, Pebble was bought out by 20th Century Fox for $72 million or $42.50 per share. And then 20th Century Fox turned around and sold one of their assets to Pit for $30 million. So just to kind of put that in perspective, Gravel is one of the many. You guys gotta go on mute.
Yeah, I got him go on mute, man. Well, this might be a dude trying to mess up the stream, so I just deleted him from it.
Okay. Oh wow. Okay. So I lost my train of thought there for a second, but now I got. So just to put that into perspective, they were able to go and sell one of their subsidiaries for more money than the entire parent company was valued 3 years ago. So this is why there is significant value in EFSH. And, you know, obviously there have been some calamitous mistakes that have been made. But even with those mistakes that have been made, there is still significant value. And there's, I expect, a pretty big recovery soon. And, as long as we're aligned, retail shareholders and, management are aligned, and we want to be able to, get this thing back on track. And that's what we want to do here.
So great. So quick question. You are a large shareholder within this company, and I want to bring up, people wonder, say, we all plan on this stock going up over time, and obviously we want to make money. You need to make money as well. So in general terms, it doesn't even have to be specifically, but when you're a large shareholder, how does a large shareholder scale out of a company so it really doesn't affect the momentum of the price as it goes up?
Oh, well, that's pretty easy. What I do is I just have a price target. I put my 4 million shares. Let's say if my price target is $2, then I just go and hit sell at $2. And then I'm just joking. I want to dispel that myth right now because I see that everywhere. When Matt goes and gets out of EFSH, you better watch out and because that's not how it works. So let's say hypothetically, my price target was $2. And I said, I want to go and sell all my 4 million shares at $2. You know what would end up happening? My average fill price would be 73 cents, 69 cents, because that's how it works. If you can't sell that amount of shares, just in one swoop, that's just not how it works. If it gets to the point, well, first, let me just state this first. I am nowhere close to what my price target would be, but just like you, I'm a retail shareholder and I'm waiting to see the actions of the company. I need to see, a turnaround, and I want to, see them making some more shareholder friendly decisions. With that said, there's still a massive gap between where this is now and where I would even consider unwinding my position. But even if it gets to the point where I'm going to unwind my position, let's say I make the decision, I'm at 4 million now. I want to wind down my position to 3.5 million. It could, take me a minimum of 3 weeks to 3 months to even unwind 500,000 shares, depending on that volume. I'm not going to do anything that's going to go and put pressure on a stock that I have a lot of shares of because it wouldn't align with my interest. Not to mention, I'm not an asshole and I don't want to, I'm not going to try to eviscerate other shareholders, do anything to put any pressure on that stock. So, just to kind of condense my answer, one, I'm not an asshole. And if you don't believe that I'm not an asshole, it wouldn't work in my interest to go and sell off in that manner. So when it does get time to unwind my position, I would do it carefully and responsibly. And I'm not going to hurt any other shareholders or put pressure on the stock.
And we should have said this at the start. We're not financial advisors. We're all retail investors here. We're just sifting through the process. But what I like about Matt, and what I'm sure a lot of you guys experience, in the last couple of years with all this money flying around with the Fed and stuff, there's been a lot of different pumpers out there on, Twitter, on social media. And, we're not here trying to tell anybody to buy, sell, hold, or nothing. That's up to you, to the individual. But what I like about Matt is, he's kind of tethered to the SEC with his filings. When he makes the move, we will know about it. And, that pushes a level of security on us as well. He's not pumping or anything like that. He's just sharing his info. He's sharing all the things that we like about the company and whatnot. Within your slides, Matt, do you want me to switch to like a different slide? We went through Q1, Q2.
Yeah, let's go to the PR that came out a month ago.
Okay.
With the possible sale or spinoff of the subsidiaries. So there's a couple of different possibilities that came up in this PR that came out about a month ago, where 1847 Holdings went and engaged Spartan to help them either spin off one of their subsidiaries. One is 1847 ASEAN, and the other one is I believe it's Kyle Customs Cabinets. And what that can mean is, again, if they spin one of these subsidiaries off into its own IPO, it could potentially have a market cap that's higher than the market cap of the entire parent company. And I'm just saying this right now, but the market cap of the parent company is profoundly low, and I don't expect it to remain that low. But I'm saying right now, one of these subsidiaries can hypothetically spin off at a larger market cap than the value of this parent company right now. And traditionally, the markets can react favorably to this. And if you want to go to the next slide, of that kind of illustrates what happened in 2021. Now, this EFSH did have a reverse split in August of 2022. So if you go back through the historical data, I can't really match the uptick in price to align with this specific PR. But I know that there was, the market reacted very, very favorably when they did actually go and sell an asset here. So they where is it here? Company platform. Oh, so they sold off 1847 Nice Inc. So this is something that the company does. And they always have these these assets at their disposal, which they could sell or spin off. So this company has value, and they can pretty much do this whenever they need to kind of show shareholders like, hey, we have assets that have value. We can either spin off, sell, if we need cash. Spin off to unlock value, to create another IPO, or be able to go and sell to get themselves like a significant pile of cash. And that, again, that cash could be used for potentially getting another asset at a favorable price and doing the same thing all over again, or going the IPO route. So it shows that they've been able to do this. The last time they did this was a little bit over 2 years ago. So I would say they're due to do it again, and they already engaged Spartan to help them with that process.
That's awesome.
Yeah.
That's awesome. And so with this last PR that they had, how do you feel about that going forward into Monday in the coming weeks? Do you think it's a step in the right direction?
Well, this one's kind of a trigger for me. So I'm going to tell you why. We shouldn't be in this position in the first place. Let's go kind of rewind the last couple of months. We had an offering in the beginning of July, which was for 3 million common shares and 7 million in warrants, which was at 20 cents. And obviously, when you put an offering out on a stock, it puts significant pressure on the stock. And it's okay to do this once in a while if you're raising money, for a specific purpose. But then 7 trading days later, they did another offering for 24 cents and for 4 million shares, which raised $960,000. Then when you're taking off the fees that they pay the placement. It's about $800,000, and it's kind of a bold move to go and do two offerings, basically on within the time frame
Mhm.
of a week. So that puts significant pressure on the stock. And with those two offerings, you should say, okay, we got all the bad shit out of the way, and we're going to be able to go and move forward and probably build on cash from here on out. And what did the company do? Um, the beginning of August, we got an 8K that they defaulted on promissory notes, and that these promissory notes were going to, you know, they had convertible notes attached to it. And what happens with convertible notes? The convertible notes convert into common shares, and they can go and sell common shares pretty much at will. And obviously, what we've seen over the past few weeks, these lenders are pretty toxic, and they kind of sell with a callous disregard for our stock price. So that kind of pissed me off and put us in this position. And I think, as I've been emphatically stating on Twitter over the past week, and I know I've had a lot of support, and you guys kind of feel the same way that I did. This shouldn't have happened in the first place. If you do two equity cash raise offerings and you're not putting that money towards that debt, where did that money go to? Why did you not put that money towards that debt? And why did you allow these defaults to happen, and then allowing these lenders to go and beat us up when we're at our most vulnerable moment? So I have to get that off my chest. And I know, shareholders that are here, we're kind of, perplexed as to why this happened after we just had two equity offerings. So finally, after a lot of it's not complaining. We had valid reasons to be upset. We get a PR on Friday evening stating that now they're going to explore a way to rework the convertible notes to pay with their cash, which should have happened in the first place. Let me state why. So this is not a bio company that's has to raise money every quarter because they're pre-revenue, or it's not a tech startup that has no revenue and they're keep burning through cash. This is a company that's they were cash flow positive in Q1. They had $35 million in revenue. They have that cash flow to be able to go and pay off debt. And, it pisses me off. It really pisses me off that their first instinct was to go and to dip into our shareholder equity. Because not only did it degrade our stock price, it degraded all of our equity. So it was just a really kind of shitty move. But they did finally address it on Friday, saying that they're going to go and rework it. And we're going to hold them to that. And you see, like I was kind of reviewing my tweets over the past week, and I look like a freaking crazy person. Like I look absolutely crazy, unhinged, and rightfully so. I didn't, I was up for 20 to 22 hours a night trying to keep morale up on Twitter, and I was answering every individual EM or every single message, trying to to the best of my ability. And I'm not a company employee or a company officer. But what happens is, they went absolutely silent on their shareholders. They don't know what's going on. Everyone's confused. And who's the next person that they turn to? The largest shareholder. And I'm like, it's not my fault. Like I'm more pissed off than you guys are because I'm the one who has the most money in it. So, I kind of feel left for dead. And, I was reaching out. So I'm like, hey, guys, you're putting me in a very bad position now, because now I'm the one that has to try to keep morale up. And, I'm pissed off myself, and I want to be able to hear from you guys. So Friday, that was a start. But, we're going to have to hold them to it, and make sure that we see, Monday morning, or that they start with a resolution. If they don't have a resolution right now to restructure those convertible notes, at least they have to work with the lenders to halt that evisceration that they've done to us. And, I hope that they do that. I know I put a lot of pressure on Ellery, and, I want Ellery is a smart guy. He's passionate. But, what happened was, morally dubious. And that may be a euphemism, but that's, I want to welcome him back into polite society and, take that role back, but he has to kind of step up as a leader now. Like, we can't wait another week to hear from him. We need to hear from him now and kind of step up and take that role. And if he does, I'm looking forward to going and working with him again.
Awesome.
So yeah.
All right. I'm gonna let you rest your voice a little bit. Some people are asking some questions.
Sure.
And we're gonna get to a question answer segment in a couple minutes. But I do have a little presentation I want to share of myself with a little DD on my channel. I do a little bit of numerology, gematria, and energy, and it goes toward how I found out about this stock. Some people know about John B. Steelers on Twitter. We've been around via CEI. Another person, Mark, he tagged me on this stock, which led me to start looking into it more. And how I usually am as an investor, again, there's a discrepancy in revenues to market cap. And one of the things I like to look at is net equity. Now, it's always, a unique basis, but I like to find companies that have, positive net equity and to see if their market cap is below that. Now, in this case, EFSH does have positive net equity, but it's very close to their liabilities as well, assets and liabilities. But the revenues that they're bringing in more than makes up for it. So let me just get into my presentation numerology wise, and then we'll get into the questions that people have. For people that don't know what Gematria is, it's simply ABC equals 1, 2, 3. There's a lot of different ciphers, but I like to keep it to the English ones because we speak English, So the English ordinal, A equals 1, Z equals 26. And for the English reduction, it just reduces to the legitimate 1 through 9 numbers. So A equals 1, then we have I equals 9, then it starts back at J. Again, ABC equals 1, 2, 3. It's been, it's been like this throughout, human history. Back in the Roman times with the Colosseum, people used to gamble using this type of numerology. They would they would calculate the names of different gladiators, and they would put their money on who they think they would win. So that's just the quick little synopsis of the ciphers I'm going to be using for this next slide. I have the websites here if you guys ever want to play around with it and stuff like that. But it's a very powerful thing that I've been using in my stock analyst for the last 3 years, and it's been successful. So to start off, why I always bring up 33. We talked about how Ellery wore 33 in Stanford and how I pinpointed that as a important number within my analysts. So let's start off when the stock market was created on Wall Street in New York. So the New York Stock Exchange traces its origins back to May 17th, 1792. Now, what's interesting about this date is it was on a leap year. And so the leap year, when it was created, was actually the 138th day of the year. But the important number here is the other 3 out of the 4 days it lands on, which is the 137th day of the year, which is the 33rd prime. And so when looking at it, you have the English reduction cipher right here. The NYSE equals 33 in reduction. A leap year with year abbreviated equals 33 in reduction as well. We have a stock market equaling 137 in English ordinal. Again, that's the 33rd prime. And we have EFSH will be the top meme stock of 2023, which is the 137th number as well, the 33rd prime. And as you see, we have stories. So when you talk to people about stocks, what do they usually say? What's the stock stories? In human history, Humans are guided by stories. Doesn't matter if it's the Bible, a movie. That's what moves us. Same thing in the stock market. People want to hear good things when they invest their money. Stock win equals 33. Meme stocks equals 33. One of my first successful stocks was actually GameStop. GameStop equals 33, but where the energetic connection comes in with me, my last name's Turner. In 3 out of the 4 base English ciphers, there is a reverse to the ordinals and the reduction as well, but I'm just focused on the top 2. 3 out of the 4, they match. So energy likes like energy, and that's how I kind of got my my life started with Gematria. As you see, there's been a lot of key players in history to wear 33 as well. Kobe Bryant wore 33 in high school before being drafted. You had Larry Bird wearing 33 for the Celtics, arguably one of the most storied franchises in history. Kareem Abdul-Jabbar, same thing, 33, a storied player with one of the storied franchises. Then if you watch Friday Night Lights, I love football shows. Tim Riggins. Tim Riggins is probably, if you think about it, was the most storied person in the show, and he wore 33 as well. But just for a couple other decodes I found with Ellery and the 33, Ellery Roberts, Stanford U, EFSH equals 330 in English ordinal. In Gematria, 0 is just the value placeholder, so you can see that just as 33. EFSH, 1847 Holdings, stock success. Again, 330 English ordinal. In the angel number, 333 is very powerful as well. The 33 is powerful, 333 English ordinal. Good investing works in any era. Future meme stock CEO, Ellery, EFSH 333, and 1847 Holdings, LNC, will be a meme stock in 2023, which is our goal. So I just wanted to go over that just a little bit. If you guys want any more information on that, I have a YouTube channel for it, but I want to open up questions for anybody that has them in the chat. So one of the first questions I saw was, well, do you think, Matt, there's will be a dividend coming back? Do you think that?
In the next 6 to 8 months, no. Simply put, no, because they're still they still have to pay off debt now, so they have a lot of debt to pay off. So I believe that that's where their money will go towards. And they do need to eventually build to a point where they can get dividends back, because that's going to help recapture some of that trust and be able to gain some long-term shareholders. But I don't see a path where dividends can be part of the equation, at least in the next 6 months. But I would like to see them at least talk about bringing that back, maybe the beginning, maybe Q1 2024. But again, that's a lot depends on what their actions are now, and if they intend to be shareholder friendly.
And so the next question we have, and David, if you have a question, you're on the conference call, I'll unmute you, and you can call if you want to talk. Just let us know.
I want to see some faces. I see all you guys on Twitter. I want to see some faces. You guys see my face. Come on.
Exactly.
Dox yourself. Come on. Come out.
Everybody wants to be behind.
Reveal yourselves, man.
Yeah, exactly. Somebody has a question. Mark Gibbs, how to stop naked shorting?
I don't know. Oh, he's asking how do they stop naked shorting? I don't know. I guess if we knew, we would put a stop to it. So right now, again, if we're talking about this stock specifically, while there is data to support naked shorting, the offender of most of that stock pressure is coming from that convertible notes. So that's where I want our focus to be, is getting those convertible notes restructured to and financed another way other than using our equity. And I believe once they do that, some of that pressure is going to be coming off. And this isn't all naked short. There is significant short interest, but not all short interest is from naked shorts. And shorting isn't illegal, and they have the right to do that. But it doesn't help shorting, having convertible notes. Because the second that those default notices came out, and it was public that there was going to be $3.2 million worth of convertible notes that were going to be converting to shares and were going to be putting pressure on us, we were pretty much effed at that point. And I'll tell you why. We had a favorable ER for Q2, 19.4 million. But you know why? We had a predetermined outcome because we had those notes that were hitting at the same time. So what I'd say right now, I don't know how to stop naked shorts. I guess everyone's doing their investigations, and we're not. I don't think that anyone's really seeing much progress on that. But for this stock specifically, the main offender of that pressure is coming from those convertible notes.
Awesome. Somebody's asking total debt. Would you happen to know that off the top of your head what the total debt of the company is?
I think right now, well, the thing is, I don't know. In terms of convertible notes on the last 10Q, I believe it was like 25 million in convertible notes, but I don't know how much was converted over these last 3 weeks. You see the pressure that came on our stock over the past 3 weeks. I don't like that. Seems like a lot of that debt was kind of, hey, Alex, look, a face. How you doing? How you doing? Are you on Twitter?
Huh?
Are you on Twitter?
Man, I'm the nurse. I'm the nurse that has.
Yeah, he's on Twitter. He's on Stock Twitch as well.
Oh, we talk all the time. Okay, how you doing? Good seeing you. Villa, right?
Yeah.
Yeah. Villa. All right. So let me just finish my thought there. I don't even remember what was I talking about again? I don't even remember. I actually don't remember. Was I talking about the naked?
It was the total debt.
Oh, the total debt. Yeah, I don't know at this point because I don't know how much of that debt was converted through that pressure that we saw over the last few weeks. And remember what I was asking over Twitter for, begging to see how much of that debt was actually converted, and we didn't get those numbers. So I'm in the dark like you guys. So I don't know. And that's to be honest with you guys. But what we are doing right now as retail shareholders is we are emphatically encouraging the company to use any other means other than our equity to pay off that debt. They have money, they have cash flow, they pay themselves in salary and bonuses when they hit top line revenue. They can simply use that money to go and pay off that debt instead of using our equity. So that's what I would like to see, and that's what we should continue to encourage. Our lovely C-suite executives from 1847 Holdings. So I know that's kind of a little bit of a discursive response, but that's how I could best answer the question.
Mark Gibbs has a question, which I think we've talked about a little bit. He says, when can we find out how many convertible notes are left? Is Ellery obligated to tell us? From what I've figured out, they're not obligated to tell us unless it's via ER. It would be more of like an obligation morally and just being nice to us if they give it beforehand. Am I correct on that, Matt?
Yeah, so the funny thing is, it was kind of ambiguous to me too, because I've seen, companies give, updates on convertible debts, even if they're not finished. But, Bill William Santana, the CEO of Nightscope, I actually, gave him that question over Twitter, which he answered me in 2 minutes, which was kind of a nice feeling, is it kind of answered our question. And traditionally, convertible notes, the updates on convertible notes would be given during ERs, or if the convertible notes are complete, they would then issue an 8K stating that the convertible notes are complete and that they're essentially debt free from those specific lenders.
Alex, do you have anything to say? What's your story a little bit? Why'd you get into this company? What's your goal with this company?
I love this guy.
Man, so I've had a tough time in the stock market. I'm not gonna lie. This is my third big investment in the stock market. Each each time I made a big investment, I've held for about 2 years. You know, it's silly, but the first one was an electric vehicle one that I held for 2 years,
Oh, yeah,
and then I got into drones, and then I got killed. But
yeah.
man, I saw this company they had that net positive Q1 this year. Like, why the hell is it so cheap? Like, why is this stock so low? And I bought in. I put like $50,000, which was my whole savings. I'm a nurse. I'm not like a big timer or anything. I'm just a regular nurse. I make $42 an hour, and I work in surgery. But you know, it, long story short, man, I'm trying to take it easy. Like, my career is very demanding, and it's hard on me, and I think of my investment like I try to go risk on all the way, and try to make it big someday. And all I can say is that it looked super good when I first got in. I think it was at 23 cents maybe a couple months ago, and I saw that they had that net positive Q1, and a little bit after that they started diluting and diluting, and then I was like, oh man, this sounds like exactly what happened to me with my other companies that I invested in. So at this point, I'm just like, man, I've heard this story before. Like, they're
Well,
hiding.
well, let me tell you something. This is not. They don't have the excuse to dilute, like, some type of tech startup, or again, like I said, like another bio company that's pre-revenue and needs to raise money. This is a company that has consistent cash flow, so I would never expect them to raise money more than once a year, because they don't need to. Their whole thing is that they invest in cash flow positive businesses, and each entity on its own have healthy margins. So there's just no, I just don't see how they would need to be so reckless with issuing new shares, especially with these, uh, deleterious consequences for shareholders. Being allowing lenders to go and convert notes to shares at this level is, it's reprehensible, and um, we shouldn't be in this position, and they don't have the right to do that. They don't, because this is not, we didn't invest in a tech startup that has some technology that's going to disrupt their sector. We got into this stock because it's boring. And that's what I want. I like boring. And I honestly, like, I would rather, invest in a company that made pantyhose than, some type of tech startup. I like boring because I like to know what I'm going to get. And if I'm investing in a company that has, 6 entities that have healthy margins, there should be no reason to go and have this significant amount of dilution and having to raise money, um, you know, on back-to-back weeks. It's just something you don't do. It's reckless, and quite frankly, it's stupid. It's stupid because you're going to lose trust of shareholders. And if you want shareholders to be able to go and stick with you long, you can't do stuff like that. Simply put, like, you cannot do stuff like that. And I hope that this is a learning experience, because I Ellery is a smart guy. I've spoken to him before, and he's passionate about his businesses. And when you talk to him, and he's able to be, kind of illustrate his passion, you're like, yes, this is why you need to come out and say this stuff. And the difference is with 1847 Holdings, it's a boring company, so people aren't going to come in here and do their own DD. They're going to do their own DD on artificial intelligence or that new tech startup. Here, you have to be overly communicative with your shareholders to kind of illustrate that value. Hey, like, you have a market cap right now, of our entire market cap is less than some of the individual values of our subsidiaries. This is a substantial value. Why aren't you coming on and saying that? And then also just the lack of communication during this down period. That's the problem. You have people that are just perplexed as to what's going on with the stock price, and being silent in that period, it just shows a lack of leadership, and just it's just kind of, it's tone deaf. And then for me, you know, they left me for dead because I'm the one who's there and has to try to kind of keep up morale on Twitter and on message boards. And, you know, that's not my responsibility. So I want to see, you know, a 180 in, you know, in that, in their posture towards shareholders. And I hope that, you know, this right now is a wake-up call. Like we shouldn't be the ones that are doing this right now. This should be something that the company does their own on addressing shareholders. But we felt the need to have this conversation and get that message out there and kind of, you know, tap the pulse. Am I saying that correctly? Tap the pulse of retail, whatever it is. That's what we're doing right now. And we all have a lot to get off our chests. And, you know, I thank you for sharing, Alex. And, you know, onwards and upwards.
And I do think we're doing a really good job. Like on Stock, Twitch, Twitter, the watchers are going up slowly. In the last 2 weeks on Stock Twitch, it's been over like 1,000 people added it to their watch list. So there's a lot of people getting interested and trying, you know, to push this to the next level. So if management can get out in front of it and change their ways after these dilutive practices, you know, it should be a lot better for us. And when we talk about the market discrepancies, I just finished watching the Big Short. Like I just popped back up on Netflix, and it was a key thing that went back into my mind. When there's discrepancies in the market, it could take a little bit for the market to finally, you know, reflect itself and have that mean reversion. People forget that Burry was underwater for 2 years on his short of the mortgages, paying the premiums because they didn't the bond market, they didn't want to downgrade the bonds of what they should have been, and a lot of people were going underwater. I'm not saying it's going to be 2 years for us. I'm not saying we should be in that type of situation, but what I'm saying is sometimes in the stock market, in the business world, it takes a little bit of time for things to catch up. You know, we almost had 40 million in revenue the first 2 quarters, and we're at a $4 million market cap. I mean, shoot, man, that's like a 10x right there. We could potentially be at, you know, at $1. So, you know, that is a potentiality, but when does that happen? You know, we don't know, but that's why, you know, you safe investing practices, and you invest what you can afford to lose, so you can wait it out for when that time comes. Let's see. Anybody else have any questions? Let's see. I'm looking at the chat right now. No. Does anybody have any questions? Speak now. We talked about the debt. We don't necessarily have to talk about how much people have invested per se.
Ellery's gonna do a fireplace meeting or what?
Fire chat?
Whatever.
I hope so. And, you know, I want to say this because, you know, despite my, you know, lashing out at him on Twitter, I had to do that because I have to give him a wake-up call. And, you know, I've tried to, you know, reach out to him privately and get these messages. This is not just me, you know, being mad at him for the first time. You know, I've sent him messages. I was like, you know, you got to be able to change this. You need to be able to reach out. And, you know, I had to resort to, you know, doing this kind of, you know, public lashing, because I tried everything else. I exhausted all of my other measures. I'm not that type of person. You know, I have, you know, over $1 million invested in this stock and in this company. I want the CEO to be viewed as shareholder friendly and somebody that, you know, shareholders can feel comfortable holding their stock long. You know, I don't want to have to force a behavioral change, but that's where I feel that I'm at right now. So you know, this is an inflection point. Because I want Ellery to go and you know, take on that lead. I don't want it to be me. I don't want to be the face of the company. You know, I took my first position here, you know, 2 months ago. I don't want that role. I want him to have that role. I want him to be able to communicate with shareholders. And the thing is, he has that skill set. He is well spoken. You know, he presents well. I've seen plenty of publicly traded CEOs that, come on and they present like shit. He has that skill set and he can do that. So I want to welcome him, kind of back into that role and, be on the same team. That's what I want to get out of this. So just so people know, my, the way that I approached it on Twitter is something that I had to do because I needed to try everything to try to affect change. And, at least on Friday night, they said that they're going to look into it, but they have to do more than look into it. I expect them on Monday to do something to, to at least halt that pressure while they come up with a solution. Or at this point to, have, rework that deal with the lenders, to pay them off, or to pay them off some way else other than our money. So that's what
Kirk has a question. He's on the conference call right now. He typed, "What is stopping Roberts from taking out new toxic loans?"
Oh, he better not now, because look what he had to deal with now. And he just put out a PR on Friday saying that he wants to rework the current toxic loans. So I don't think it would be a very good move for him to do another toxic loan anytime soon. And I hate to say, there's a new level of accountability. I don't think that he ever thought that this company is going to get this type of spotlight on it. But I guess when I got in and I took this type of took my type of position, it put that spotlight on it, and that means that he has to be a lot more careful with the decisions that he makes. You can't go and default on promissory notes or take out new loans, because every single move that you make right now is going to be scrutinized. And will the behavior change? I don't know, but I hope so, because this can be saved. And the thing is, look, I kind of did a deep dive into the last ER. There are ways that they can easily fill that gap. There are simple fixes right now that can take this from a company. Right now, between Q1 and Q2, I think they're down about $3 million. They're at about $3 million. There are simple fixes that can bring that, to bring this to net positive. And they're, if you look at their financials, the general admin expenses, they seem a bit excessive. If you can give those a haircut, and you shouldn't be paying yourself bonuses on top line revenue, because again, it's very easy to go and achieve more top line revenue because you're, they added another subsidiary and they're putting money into those businesses. But we want to be able right now, $80 to $90 million of top line revenue is good enough. Now you can stop that, and work on closing the gap to profitability. And it's an easy fix for them right now. It's not like they're that far away, and if it comes to, condensing executive pay, or, giving the general admin expenses a haircut and scrubbing those numbers, it's easily achievable. Some of those general admin expenses are crazy. I think I saw for ICU, I think with the management fees and the general admin fees, it was $875,000. That's just for 6 months. I'm like, damn, what are they doing? I was like, what type of benefits package are they like staying in the Four Seasons every night and getting fed steak and lobster dinners? If you're an ICU employee, like, where do I sign up? Where are those general admin expenses? What I'm saying is there are ways to go and cut down on whatever those are. And especially if the company and the shareholders are a lot of shareholders are down a substantial amount, you don't go and bonus yourself on top line, on revenue numbers that aren't shareholder friendly, especially in a time like this. Those bonuses and whatever salaries you're getting, give yourself a deduction and use that to pay towards the debt instead of using our equity. And they have to adapt their mindset now. And I'm not trying to be funny. Like, they have to do that stuff now and show shareholders, especially after what they pulled with defaulting on those promissory notes. So that's an unforgivable action. and they need to be able to, kind of come in come in with a grand gesture, and that would be, using whatever bonus monies they got for meeting those, top line revenue numbers that aren't really shareholder friendly. So that's what I want to see. There are a lot of actions that they can take, other than using our equity, and they have to stop those convertible notes now. Come up with a solution other than using our equity to pay down that debt.
Mm-hmm. And like you've said before, after all, these are great options to fix it. Everything we have right now is fixable for the company. These are tweaks here and there that would make a big difference down the road, and which I still like about the company. A lot of people in the chat, I know there's trolls in there. They're trying to get people scared and whatnot, but there's still a lot of positive things ahead of us if they just take the correct steps.
Yeah, something positive to look forward to. 1847 company called Wolo. They make a lot of automotive.
Yeah.
They're gonna do a partnership with ICU that they're gonna make a product together. It's gonna be a eyewear for automotive.
Oh yeah, I saw that. Yeah.
Coming out Q3. Something negative that I saw on the last earnings report. It looked like we were down 3 mil or 3.9, 3.2. Either way, it looked like it was just a bunch of interest expense.
Well, that's another thing. So the interest all right. So, the light at the end of the tunnel for all this, convertible notes is they're getting a lot of that debt off the books, and that debt has interest. So that's one thing that he could speak to and say, like, hey, we're getting those interest payments removed. But again, this comes down to communication. If you had an ER call, right? So he didn't do an ER call. So he could have addressed this, like, say, hey, yeah, we're adding some shares to the outstanding share count, through the convertible notes. We're going to get beat up for a little while, but at least, when it's all said and done, we're going to be getting rid of those interest payments because we're cutting down on our debt. But nobody's telling us that. So how are you supposed to know? That's what I'm saying. There's no communication here. If something bad happened, let us know, and let us know it's going to be okay. And, at least walk us through your thought process. We can't, we're retail investors. We're not going to know what your thought process is. We're not going to be able to read between those lines. I can think, by looking at that, and, kind of put two and two together, saying that, by paying off some of that debt, it's going to eliminate a lot of those interest payments. And yes, their balance sheet's going to be a lot cleaner when this is all said and done. But also, when it comes to small caps, our equity is important. I don't like when my share count was at, my equity was over 20%, and now my equity is under 10%. I'm not happy about that because, when I initially signed up, I wanted to have, a certain stake in the company, because then, I can control that part of the float and I could hold that long, and it's going to make it a lot easier. But they kind of took that right away from me by that reckless and callous dilution. So but again, he's not communicating. So we have to have this conversation. This is actually good dialogue, because that's something that just came out through dialogue. Like, yes, they did dilute shares. And yes, our equity was badly degraded. But once this is all said and done, we're going to have a cleaner balance sheet. So there's that.
Question towards that. Like, I was thinking about it, they know what you have equity wise within the company. Do you think part of the reason why that they diluted so much so quickly was because of your percentage within the company? They see that and they wanted to, lessen you down a little bit. Do you think that could have been a possibility as well?
That thought crossed my mind. Imagine I was responsible for all the dilutions because they just wanted to. It's my fault because they wanted to reduce my equity. No. I think that there were some poor decisions that were made. They didn't raise the money that they needed through the first couple of offerings, and they probably needed to use that money from the offerings to pay off those lenders. And then, the clock ran out. And instead of, again, but they still did raise some money during the, and I don't have the exact number, but they still did raise money from those offerings. But the thing is, he should have moved heaven and earth to stop those convertible notes, and he could have done that because, again, like he said in that PR that came out on Friday, they have significant cash flow through their businesses. They could rework something somewhere to go and pay off their lenders without tapping into our equity. So they have to, moving forward, they have to, turn over every single stone before tapping into our equity. So that means, first, reworking the general admin expenses. And then if you can't do that, then you have to go into your own pay. You don't get bonuses if you're taking from our equity. Like, plain and simple, you don't get bonus, especially if you're being bonused on metrics that don't work in shareholder favor. And then, then it goes down the line, man. I don't care if you have to go out and sell Girl Scout cookies. You raise money however you can, other than touching our equity. So that's where I'm at.
And somebody, Mark, in the comments, he said, "What if? What's your next plan if they go silent this week? If they don't say anything?"
Oh, then I'll probably just be an even more of a lunatic on Twitter. We'll just get out the troll farms. I don't know. I mean, I could. It would be unimaginable for them to not have some type of reaction, based on what we've had to go through and what we're doing right now. We as shareholders right now, like, we're finding value in their company. We're giving their company a platform that they never had before. So they should embrace this right now. And this is a moment in time. They can't step back right now. They should appreciate that they have shareholders that are taking this type of interest, that are, doing a live YouTube on a Sunday night. I've never done a live YouTube before. Like, I was nervous going into this shit. But this is what we do, and this is where we're at right now. So now it's time for him to step up. And, I would, if he doesn't, use this platform, it's not going to impact my decision, right now, but I fully expect them to, make good on their PR stating that they're going to go and restructure those convertible notes. And, I do anticipate hearing from them. And, he needs to do his, little campfire. What is it called? The fireside campfire chat. He needs to do that. He needs to get out there and address shareholders. He needs to make good with me too. Like, cause I'm mad at him, dude, cause he left me for dead. And that's the honest truth. Like, he left me for dead, to go and handle, disgruntled shareholders. And I love you guys. And, I enjoyed this week getting to know you guys, but that's not my job to do. This is his job to do. So, to kind of answer that question, there's nothing immediately that I'm going to do, but I would say that I would fully expect them to have a 180 on their posture towards shareholders.
And we're behind you on this, Matt.
I know you guys are. I know you guys are.
And we're doing what we can in this part. When there's not many opportunities where for a fact somebody is an insider or a whale that has this much with stake within the company that we can tangibly see and talk to. And we love that about you. And so whatever you need from us, we're going to continue to do, because we want to see this company succeed. And if we had to keep putting the fire to Ellery's feet and management, we'll continue to do so. It's been an hour. Does anybody else have any pressing questions before we
I don't want to be out? Too bad Matt's not the CEO. I don't want to be the CEO. I just look, I have a good life. I like to, I take my daughter to school. I go to the gym. I walk my dogs. I watch The Office and Impractical Jokers. I like my life. I don't want to be the CEO. I don't want to have that job. I just want Ellery to do his job. That's all I want. Like, this is not me trying to, do a hostile takeover of the company. I don't want that. I just want him to do his job. And I'm still giving him, it's not me to give him that opportunity. I still want him to do that. And I want to have that relationship with him. But it's time for him to, get out of hiding, and man the fuck up.
Yeah. Mm-hmm. Alex, you have anything else to say before we close out? Thank you for popping on.
A quick question about this lady Chow that's a part of our board now or something like that. Did we owe her something? So this person, it was a recent PR that she's on our new board of directors or something. Well, who is,
No, I think they had a board member that retired, and she's somebody that had experience that would align with their businesses. So I don't really know much about her. They don't own her or anything, but she's, I believe she has some experience with like acquisitions and stuff like that. So I believe that her experience, aligns well with what they're doing. But with that being said, go and buy some shares. Listen, these board members, you can't be a board member of a publicly traded company and not have $5,000 to go and throw into the stock. Like, we need to see that type of stuff, and that's, the stock is at its low. It can't just be me filing Form 4. And you know how expensive it is for me to file Form 4? Every single time I had to file a Form 4, it cost me $125, and I probably, yeah, that shit adds up. Form 4s and 13Gs, because I don't know how to do it myself. I have to pay this service to do it. And that adds up. I've probably spent like over $4,000 on Form 4s over you've seen how many Form 4s that I filed. So, they need to kind of pony up a little bit, get those executive teams and get those board members, buy some damn shares. It's at the all-time low. You don't know the value in your own company. Do I see more value in your company than you do? Come on, show up, pony up. If you can't afford $5,000 and sitting on a board of a publicly traded company, then you shouldn't be sitting on the board of a publicly traded company. Buy some shares.
Somebody had a question. Do you know any of the other institutional investors in this? Do you talk to them at all about any of this?
I don't think there are any real. I think there's Mast Hill and no, I don't. But I don't think there are any real institutional investors that I know about. Mast Hill is a lender, and I think that they still, I believe that they were a filer. They filed their shares, but they weren't ever going over 5%. And there was, somebody else kind of brought this up. And since when you go over 5% of a company's outstanding share count, they have to file a 13G saying that they have this amount of shares. But since they were the lenders and they kept converting notes into shares, I think that what they did is they kept themselves at 4.99, so they didn't have to file. So I think that that's kind of what we've seen going on. And this way they can kind of stay under the radar a little bit. So I think that that's what's going on, but I don't speak to any of them personally. It's funny, I was so crazy this week that I was looking up the numbers for Leonite and Mast Hill. I was like, yo, cut this shit out, man. Come on, give us a break. But I couldn't get in touch with them. I got some number in California. I left a message somewhere, but I couldn't get in contact with them. So. Is that the Derek, the guy that keeps?
Yes, the meme maker right there.
I know, you keep making memes of me, and you make my nose look very large.
I gotta get a new picture.
Yeah. How you doing, man?
Good. How you doing?
Good seeing you.
Yeah.
Nice having you on. You have any questions? What do you want to talk about? What's your story?
Just put the kids to bed, so that's what I just did. But
did you miss this entire thing?
No, I was listening halfway through. So
okay.
I was wondering, did you touch on? I know you had mentioned, Matt, that the company reached out to you privately. Did you touch on I don't know if you can share?
So I'll tell you. I'm going to try to go over the conversation. I was pressing Ellery to get the information regarding the convertible notes, and I'd sent him a pretty stern email, basically stating that it's our legal right to have this, to be able to provide this stuff for shareholders, or it's a moral obligation on that end. So, their counsel went and reached back out to me trying to get clarification as to exactly what I was looking for, because maybe he didn't understand the email. And I said, you have to be able to go and reach out to investors. You have to reach out to your shareholders and either get that, that 8K out, or give them a timeline of getting that 8K out. I guess he heard my response, but then didn't get back to me after that. But I don't know if that, that PR that we got late Friday night was based off of that conversation, because I did ask get some level of communication regarding the convertible notes. But I wasn't.
Doesn't that scare you?
Oh, it absolutely scares the shit out of me, because what I'm thinking is it was a lot worse than what we thought. Or there were more notes left than we thought, and they didn't want to, cause a stir. So they're basically saying, like, we're going to, pick up the tab. Hopefully what they're saying right now is they're going to go and they're going to pick up the tab themselves and find another way to pay for it. And look, they have money, dude. So it's not like they can't go and, they have cash flow from these businesses. They're spending way too much on their own salaries and their bonuses. So there are ways to go and give those other areas a haircut to pay off this debt. And I fully expect that to happen, because, again, right now, whether they like it or not, there's a huge spotlight on this company, and they have to go and step up and do the right thing. So, and the right thing is not taking our equity. So I do think that it was worse than we thought, or else they would have, gave us that information. But also, I believe that they have the power to stop whatever it is, even if it hurts their own pockets a little bit, if you know what I'm saying.
No, it makes sense.
Yeah.
Appreciate it.
Anything else you got, Derek? You popped on.
What's the next meme? What's the next meme for me?
Yeah.
I don't know. I gotta think
I don't know
about
yet.
it.
Yeah. Use a different picture. Those pictures, my God.
I'll
But
get
the
one
sunglasses.
tonight. I personally, for prediction tomorrow, I think we have a decent day in the market tomorrow for the stock price. If they are done like they said with all that dilution, I think it's only up from here. So even if we don't get the communication we want, if we can see the stock price making some good movements, that's something to hang our hats on, at least for now.
Well, you saw on Thursday and Friday, it didn't have the same amount of volume or pressure that it had from the previous week. So I don't know, that's why I feel like he can kind of, like, hey, stop right now, don't cut this shit out. Give me a second to huddle with my team, and we're going to make this right. Just stop. You can't do this, because if we see that pressure continuing, we're going to know that that's from the convertible note. We're not throwing up any smoke screens and assigning blame to naked shorts. No, you invited that chaos to the stock, to this stock by, defaulting on these loans in the first place. So you own that and you make it better. It's up to you to go and make that better. And I feel like that pressure, it has to be getting to them. You don't want this type of spot. You don't want this type of spotlight on this company right now. And I think it's time for him to go and do the right thing. And again, right now, he has a group of enthusiastic shareholders that actually find value in the company. So he can take this and run with it, and do a 180 of his posture towards shareholders. And I expect him to start that tomorrow. And if he doesn't, I gotta start trolling his ass on Twitter. I don't. It's a lot of work, man. I didn't really get a lot of sleep this week, but again, I want to see a behavioral change from Ellery, and I expect that to start happening tomorrow.
Somebody said, do you foresee a reverse split? You've touched on it a little bit. It's on Amex. So
no, so there's no need. So this is the one good thing about NYSE Amex. I've seen stocks get delisted before, but that's generally if the stock is going bankrupt, or if they file for Chapter 11. They are extremely lenient in terms of share price and market cap. They don't have those same type of requirements as NASDAQ stocks. So they don't need to do a reverse split. Some do a reverse split just because if their stock's kind of getting beaten up for a little while, they do it. But, I think that if Ellery tries to pull some shit like that, that would be the nail in his coffin. So I don't foresee that happening. He won't be forced to do that by the exchange. It would be a decision on his own, and I don't foresee him doing that.
Mm-hmm. Mm-hmm. I mean, that would hurt his shares too. He just bought. I mean,
I
it was a
don't
small
think he,
amount.
I don't think he cares about his share. Like his shares are a drop in the wall. You know, I mean, I hate to say that, but there would be no incentive for him to do that other than to, you know, piss us the fuck off. And there's no point for him to do that. Now, what some companies do is, you know, they'll do, if they're beaten down, they'll do a reverse split to go and raise more money. But again, Ellery's done with raising money. I'll tell that. Like, he can't do this again for at least a year. Like, he's cut off. He's done, you know, back-to-back offerings and then the convertible notes. Like, he knows that he can't do this again. So I expect his next moves to be shareholder friendly, you know, as in, you know, doing an IPO or spinning off some shares to us by, you know, breaking off one of their subsidiaries as its own entity, or selling off an asset and give them some cash to either pay off debt or to give them some cash on hand to use and maybe buy, you know, an asset that comes along later at a favorable price. So
Awesome. The questions are drying up a little bit now. We put in a good hour 15. If no one has anything else to say or anything like that, you know, Matt, you did a great job. You pushed through with that little cold you got, and thank you so much. Any final words before I close this up today?
Meet you guys, man. I'm gonna hold strong.
sounds good, man. All right, guys. I'll see you.
All right, let's hold the line. You guys have a good night.
Good night, guys.
You too.
Bye-bye.
Thanks.